we are heading for one of the best years for your investments in a long time. But if you've been underinvested or maybe you've been uninvested, don't beat yourself up too bad. The chart master is here, and he's got a few names that he believes still have room to run. Carter Worth over at the Plaza with more. Give us some opportunity, Carter.
Sure, let's bang it out. It's names that have a common circumstance. They basically are hovering at well-defined tops at a common level and have really not made progress for basically 18 months, i.e. they're lagging the market. And the presumption is they're going to break out just as the market did, right? So if you picture these tops, we know the S&P has done this, right? The betting here is that ISRG, one of the biggest healthcare stocks, is going to do it. Look at the next setup. It's the exact same pattern because it really doesn't matter what the operating business is. Verizon. Well-defined tops at a common level. And the betting is, you can draw it this way, you can draw it so many ways, but the betting is that this is going to exceed those highs. Look at the next one. VF Corp, big consumer name, right? Well-defined tops at a common level. The betting is that it's going to exceed these tops, to break out. These are the kind of names that have held back and they have potential. Becton Dixon, it's the same setup, it's the same story. Tops in play, breakout potential there, and I would buy it. And then finally, one of the biggest of all, well-defined tops at a common level. You can see it, you can feel it, and the betting is that this breaks out. What's so interesting, of course, is he's got a lot of utilities which are doing well. He's got a lot of Apple, and he's got a lot of railroads, and those are also good. This stock probably catches up with a lot of those.
Chartmaster Carter Worth. Carter, thank you very much. Okay, around the desk, we got some good names there, Guy. Intuitive, Verizon, VF Corp, Becton Dickinson, and your buddy, the Oracle of Omaha.
Becton Dickinson is the most interesting one. And Carter, by the way, you can see him each Friday at 5:30 on Options Act.
Listen to you making a nice little promo for that.
Big Carter Worth fan as he walks away. But what I'll say is Becton Dickinson, 19 times forward earnings, is the most interesting one. Listen, ISRG, Intuitive Surgical, I get it. It's breaking out. But it ain't cheap at 40 times forward earnings. So if you want a stock that I think is reasonably valued, breaking out to the upside, it comes out BDX.
Well, if you think about Berkshire, the exposure that they have not only to the banking sector, but also to some of those things that are very industrial is very encouraging for laggards that still have some value. So that's a chart, and that's a name in this environment that I think you follow.
Yeah, look, I think it's hard to argue with Carter. I think the setup for all those names is pretty good. If you get those breakouts, I think you could have additional momentum to the upside.
Anyone that really sticks out to you?
No, not in particular. But what I will say is, with the momentum of the overall market, upon those breakouts, you could have even additional momentum. And Karen, to your point, talking about earnings, you have 178 for 2020. Even if that gets cut in half to 5% earnings growth down to 170, if the market is still willing to pay 20 times for trailing earnings at the end of next year, that gets us to 3,400. So you don't need tremendous amounts of multiple expansion. The Fed still is going to be on hold. So I think in combination, even if you pull back earnings expectations, it's enough to push the broad market higher. So upon these technical breakouts, you could have even additional momentum.
If I had to pick one of those, I'd probably go with Verizon.
I knew it. Verizon. What makes Verizon look so attractive?
Well, I think that as rates have come down a lot, so that's huge for them because clearly they have they have a balance sheet that lower rates, obviously better. But I think
they got a lot of debt.
They got a lot of debt. It's a very short way of saying what I was trying to say, very long way. They have a nice dividend yield, which I normally never like to look at a dividend yield as anything to be a peg to buy the stock. But also, I don't know, I think they're doing the right things. We'll see if streaming helps them. I think that entertainment asset might have more value. So all those reasons, cheap PE, Verizon.
There you go. All right.